Good afternoon, everybody. Today we're going to be discussing GP property and partnership change, and we're running through different services that can relate to. As Tom said, there'll be opportunities for questions and also to answer a few polls so we can tailor-make this webinar for everybody that's here. The agenda today is to go through partnership agreements, partnership change, valuations, succession planning, identify potential issues and the solutions for those issues, leases, and then the approvals for those leases, and sale and leaseback, followed by some question and answers at the end if we have time. Just as an introduction as to myself and GP Surveyors, GP Surveyors has been going for 25 years. We've been the leading primary care premises surveyors for those 25 years. We started off with notional rent reviews, and we swiftly branched out into all areas to do with premises for GPs. I've been with GP Surveyors nearly 9 years now, and yet my career started with notional rent and has proceeded from there, and I can touch upon all the services that we do offer. You might meet some of our team if you ever ring in, so that's a lovely background drop of us all if you like. So let's move on to managing partnership change. Firstly, it's essential for any practice to have a robust and valid partnership agreement. The partnership agreement should be reviewed and updated every time there's a change. So every time there's a partnership change, GPs coming in, coming out, or any time that you merge, or how you view what should be going on in the surgery. If you don't have a signed partnership agreement, you'll have what's called a partnership at will, and it's a really outdated, not industry specific document, and it automatically deems all equal shares of everything across people within the partnership, and there's no mechanisms to allow for retirement or dissolving of partnerships or merging of partnerships, because it's from 1890, so you can imagine how old the document is. It's never been updated. So it's really essential that you have a robust and valid partnership agreement to be able to move forward into other areas for the premises. The partnership agreement should stipulate how the property is valued, and that is why it's such a significant part of premises. The partnership agreement will discuss how it's to be valued, so whether it's to be valued as a GP premises or whether it's to be valued as alternative use, dependent on where you are in the country. Usually, market value is extinct. The best market value is using it as an existing use. So, for example, still using it as a GP medical practice. It'll also discuss third-party experts, and if you can't reach an agreement, if you've got GP partners leaving, who you're supposed to use and what the necessary outcomes of those will be. A single joint expert has a duty of care to the practice, including exiting and incoming partners, and you only need the one valuation for that. So it can remove costly disputes, but it may become necessary to use the same expert in the future for consistency and to process the value. Equally, that person who's valued that property will have a good understanding of the property as well. Exiting and incoming partners usually get their own valuers to negotiate on the price. So usually what happens, if you've got an incoming partner, they will get a valuation done. If you've got an exiting partner, they'll get a valuation done. And then there's a negotiation in terms of purchase price somewhere in between. So we'll move on from partnership agreement to market valuations. The market valuation is very much based on what's stipulated in your partnership agreement. That's why it's so important. Now, partnership agreements are normally created by a solicitor, whereas your valuations are done by your surveyor. So one affects the other. if you like. So the partnership agreement has to come first, and then a market valuation can be done next. So GP surveyors have completed 100 market valuations over the course of the last 12 months for very different purposes, but the majority are dealing with partnership changes, and those tend to, those valuations tend to be wanted swiftly, but we always ask the partnership agreement so we understand how we should be valuing the practice. We do get involved in partnership disputes where the partnership agreement was silent on how the property should be valued. And this is where you've got a partnership agreement, but it's not robust enough and it doesn't discuss the premises. So it doesn't discuss how it should be valued. It doesn't discuss disposal of the site or anything like that. So when that happens, basically it's a little bit like a free-for-all. You can value it however you want. If your partnership agreement is silent on it, that means that any surveyor can assume anything. So what we've had in the past is one surveyor has valued it as alternative use, and what I mean by that is housing or offices, and another surveyor, us, have valued it as an ongoing GP practice. And we've had the differences of up to 400% in terms of what the values come out at. Now, that's when you would go to appeal, or you would go to sort of third party for them to discuss which valuation would be correct. But it's really costly. So it costs a lot of money. So if you think each valuation, you're paying for a valuation each, and then to appoint a joint expert is even higher in price. So what you're finding is that you're doubling up on fees where it could have all been resolved at the start in your partnership agreement. So it's definitely worth getting your partnership agreement to mention the premises, how it should be valued, and what the valuation looks like. The current partnership landscape is changing quite dramatically. I would say since COVID, the majority of the landscape changed dramatically anyway, in the sense that young GPs weren't buying into premises, and older GPs were wanting to leave premises. They were wanting to retire and get their money out of the property. And the old model would assume that you were going in, a new GP would buy the exiting GP out, and that was how the old partnership model would work. Now what we're finding is that we have GPs who are retiring early, GPs who, are just at retirement age, and they're wanting the money out premises, but they've got no succession plan, because their old succession plan would be for a younger GP to buy them out. Younger GPs don't want to buy into premises, mainly because they've got university fees for student loans, their own mortgage, they might have other things going on in their lives, as well as the changing dynamic of what we saw after COVID, which was work-home life balance. We saw a lot of GPs decide to become locums. We saw a lot of GPs look to be salaried. So the landscape dramatically changed in terms of who was buying in and who was leaving. Now, what that means is that we are having to look at other ways to allow for GPs to retire, because, as it will state in most partnership agreements, is you have a certain time frame to allow to buy out that GP partner before there are other consequences to it. Now, that time frame usually sits around the year to 18-month mark. So from the last day of them working in practice, you have roughly 18 months to buy them out of the surgery or look at alternative means. And what that normally means is looking at sort of a sale and leaseback option. to allow for buyouts to happen, or for the current partners to take on a higher percentage of mortgage to retain those shares. So I think one of the best tips, one of the best things to look for and best bits of advice I can always give people is to have these open and honest conversations within partnership where you're discussing what retirement looks like for you. You're also discussing disposal of the asset if needed. And you're also talking about are you part of the NHS Future Estates Plan? Are you, does the site, the property actually allow you to be? A lot of this is open and honest discussions, but equally your partnership agreement should tell you how you value a surgery, how long you have to buy a partner out, and what you do if you cannot buy that partner out. So Tom's going to launch a poll for me. This one's going to be in regards to partnership change in your practice and the ownership of your practice currently.
Okay, the poll should be popping up on your screen shortly. So when do you foresee partnership change in your practice? This year, the next 2 years, next 5 years, or longer? Just quickly click answer. Yes, that's quite a few people. Just give a minute for everyone else to answer. So that's most people have answered now. So the results are nearly half the people that have responded say this year, hence I guess why you need to come on this webinar and get some advice, and a third next 2 years, and the rest is obviously longer or not sure. So there we go.
Oh, is there another one, Tom?
Yep, there's another one just coming. Just give us a little bit more details about kind of the ownership status of the property. What is the current ownership status of your GP property? Currently, the GP partners own it, retired GP partners own it, a third party owns it, or you're not sure? Well, okay, so yeah, as we'd suspect, again, by the people coming on the webinar, about 2/3 of people, the current GP partners own it. About 15% a retired GP partner or partners own it, and 10% is like third party. Okay, so I'll pass you back to Rebecca.
Okay, so let's talk about your succession planning and the property. Succession planning and solutions. So these are 3 areas where we would look, or what we would look to put in place if your current partnership model, and what being meant by the current partnership model is where a new GP buys in and the existing GP takes that money and goes. If you can't do that, then these are some of the options that are applicable to how you carry on. Now, a lot of you look to be going through partnership change in the next 12 months. So what I would say is look at your partnership agreement, get a date in order for your minds to be set on when that partnership change is going to happen. And then in accordance to your partnership agreement, does it state how you value the surgery? Now, the norm, unless you're in London centre or the heights of London, the norm is that an ongoing surgery is worth more than an alternative use valuation. But if you're obviously in London or high value residential areas, that can sometimes tip the scale a little bit. But yeah, normally, or the market norm is that a GP practice is significantly higher in value than housing because it has guaranteed rent coming through a government body. So I would hope that any valuations or your partnership agreement, if you're outside of that anomaly of London, that your partnership agreement states for it to be valued as an ongoing GP practice. Now, if you get your valuation through and you haven't got an incoming GP partner who can purchase, or your current partners can't do that either, then these are some of the options that you'll need to look at. And the problem with some of these options, I guess, is the length of time it takes to get these options put into place. So it's not a case of you could get your valuation in and the GP who's retiring has a date of, let's say, the 30th of June. You have your valuation date set as the 30th of June, and you go, right, we can't afford that, or the GP partner who's coming in won't purchase that. So you now, in accordance with your partnership agreement, have 12 to 18 months to decide what to do with the premises. Well, for example, putting a lease in place where the exiting GP partner keeps hold of their shares and becomes basically a landlord, that can take roughly 12 months to put in place, dependent on where you are in the country. And the reason for that is best practice, and my advice is that you get it approved by the ICB. You get the lease approved, because then you will never have a shortfall of rent. But when you go for approvals within leases, it takes a significant amount of time. I mean, we all know how quick the NHS are. We all know how quick it is to receive your notional rent figures. It takes time. So I think it's best that you recognise that, and you start to think about, well, if we can't afford to do it now and we've got nobody recruiting in to do that, then we're going to have to look at one of these options, and they take a bit of time to put in place. What you don't want to happen is you get to the end of the retired GP's 18 months and then start the process, because then it actually takes longer, because there's nobody in practice and you're negotiating between the landlord, who's the retired GP, and you as tenants. So it might be that he doesn't want to take on external repair works, and then there's a lot of negotiation process. Whereas if you start it quite early, then we can reduce that amount of negotiation, really. So if you think about how different things can impact your property, every situation and every client is completely different. So having a lease with an exiting GP partner might not be the solution for you. It might be the fact that you actually need a sale and lease back, because the exiting GP partner does not want to hold on to the property at all. It might be that you don't have enough partners in premise to sign a lease. So we're looking at a sale and transfer of contract. So there are different options, but they all take a little bit of time. So we're going to just have a chat about what a lease is, when it's needed, and moving forward if you wanted to look into putting a lease. So 4 things make up a lease, and if you don't have one of these 4 things within a lease, it isn't a lease. It could be a license, it could be a contract, but it's not a lease. So the property needs to be named. The parties, there needs to be a landlord, and there needs to be a minimum of 2 tenants with their names and addresses on. There has to be a period of time, for example, 15 years, so it's a 15-year lease, and there has to be a price, that's your rent. So we're looking at the demise of the property. So are we leasing the whole property? Are we leasing the internals of the property? Do you have a third party within the premises already, a physio, a pharmacy, a dentist? So you're only going to lease part of the property and the other part of the property is already leased to a third party. But these are all things we need to understand and need to know before a lease can actually be drawn up. So yeah, so the property is a huge one. Who owns it and who's the tenant? That's the next bit. So you can't have as a tenant the Smith's surgery, for example. It has to be two named people, and it has to be the GMS contract holder and one other. So that's the other thing. Leases are held personally. They're not held by the surgery. So the people who are named on there are the people who are signing the lease, who will be obligated under that lease for that amount of time until they come off or it switches. The period's really important. The time frame of a lease is really important because that can affect value. So if you have a long lease, 15 years, then that's good. It'll give you a good current market value. But if you have 7 years, you're going to see a reduction in that market value for sale. And that's because the person who's purchasing it doesn't have a good length of time to regain the money from the rent. And then there's a risk period after those 7 years. Normally, what we would say is people purchasing property tend to have the property paid back off or paid off since purchase around the 12-year mark. And then years 13, 14, 15 are profit for them, and then hopefully you would renew your into a second lease, and then so on forth, it'd be profit for them. But if you only have a short lease, then that will change the value because an investor can't get their money back if you're going to break in year 7. And then the price, so the rent. One of the main things we would always say is we want to check the rent. We can always you could always pop in the notional rent into a lease rent, but it's always worth checking it because the rent is affected by what terms are in that lease as well. So it's always worth making sure that everything's fair and fair. It's value for money for the ICB, and that you don't have any shortfall going forwards as well. So let's have another poll and see where we are with that.
Okay, just bear with me. I will just quickly put up the next poll. And then we also have a couple of questions. Now we've got a break. I'll ask for your questions to Rebecca as well. So here's just the last poll. Does your practice currently have a lease in place? Yes, no, and not sure. Okay, so so the vast majority, let's change a little bit. The majority, 2/3, don't have one. 10% not sure, 20% do. So yeah, 2/3, I guess, are right at the start of the process of not having a lease at all. Right, I'll just pop back into the chat and put your questions to Rebecca. Right, so this question is from Annie. Can a GP who is a building owner stay a partner if they've got no sessions and just retain ownership of the property, but do they have to become a landlord?
So if they're no longer working within premises, they are deemed a landlord, and you should have a lease in place. A lot of surgeries don't do that, but it is best practice that as soon as a GP retires or no longer works in premises, a lease is put in place because it secures everybody's rights and obligations within the property. I would say that it's obviously dependent on how long that GP's no longer been in premises. If they've not been in premises for 2 weeks, then you can't expect to be having a lease in place usually. So, but yeah, I would say best practice would be that you need a lease.
Okay, another question was regarding the point we were talking about before about who can sign leases. Someone said, could the ICB sign a lease then?
Yeah, so NHS Property Services will sometimes take on leases. They'll take on a longer lease, but the people who are actually working there and running the practice have to have a lease anyway. So what happens, or what tends to happen, is on these properties where, for example, you only do have one partner in premises, you will have the NHS Property Services take a head lease of 15 years with the current owners, and then the NHS will give you a license or a lease stated for 2, 3, 7 years. It's always shorter than the head lease, to allow for those kinds of situations. The ICB don't take leases. They are in the process of potentially taking that on board. So they're having quite a few changes, as I'm sure everybody is aware. So they're in the process of looking if they can take on leases. But the ICB won't take on leases unless there is a situation within the surgery where it is required. So you would have to have a shortfall of partners to sign, or you would have to have instability within the practice of some sort to be able to justify the ICB taking a lease.
Okay, we do have a couple more questions, but I think they'll be answered in the following slides. So if they're not, we'll circle back. I've not ignored them. We'll come back to them if they're not covered. Okay, I'll pass you back to Bex then.
So when is a lease required? Let's talk about that. A lease is required when you have an uncommon party. So an uncommon party is, for example, anybody who owns the property who no longer works within premises. So notional rent is given to properties where you are an owner occupier. So where the GPs who own it work inside that premises. As soon as one of those people no longer work in premises, you need a lease putting in place. You also need a lease putting in place when that term is going to be over for 3 years. So, for example, if the GP who was no longer in premises was on sabbatical for 12 months, there was a distinct time frame, he was on sabbatical for 12 months, then you could have a license or you could have a contract put in place. They're different to leases. But where there is a period of over 3 years or an unspecified amount of time, or you know they're never returning, then a lease is required. The majority of leases that are put into place are 15 years, and that's because you receive the most amount of market value at that point, which means you automatically should be registering with Land Registry this lease, and it does attract stamp duty land tax. So you could look at something smaller, so a lease that is under the 7-year mark, but my advice would be that if you were ever going to sell it, you would need to change that lease. And they are quite costly to put in place, and they are costly for everybody to kind of disregard. So you want to get it right the first time round, ideally. So yeah. And then let's talk about, there are a lot of different types of leases. There's a broad spectrum of what can be put into a lease. I'm just going to discuss the ones that are market norm. But you can change them. Not every lease is exactly the same, otherwise you just have a template that you download from Google. They are specific to site, but they all have the similar running themes through them. So one of my favourite leases to put in place is a tenant internal repairing lease. And the reason I like this lease is because it runs in the similar way to how your notional rent is calculated. So notional rent is based on hypothetical lease terms set out in premises cost directions, set out with the DV. Those hypothetical lease terms are 15 years, tenant's internal repair, 3 yearly rent reviews. So tenant's internal repair is actually really easy because that's the kind of guidelines you'll already be following as a practice. You know, you're looking after the internal skin, but if something goes wrong outside, or if something, you know, if the roof caved in, it's up to the owners to kind of fix that. I'm not saying that's how every practice is run. There's a lot of grey in practices. It's not black and white, just like life isn't black and white. But tenants' internal repair in leases do run how notional rent should be run when you receive notional rent. So the landlord looks after the structure of the buildings, and then they also look after external repairs and insuring the property. The tenant is responsible for the internal skin and repairs and maintenance. I know what everybody's going to ask me is, what's the boiler consist of? Windows and doors, and what about like electricals? What I will say is, on those three things, it's kind of a negotiation process. And what I mean by that is, usually what happens with a boiler is the tenants are responsible for the maintenance, so any servicing of the boiler, but the repairing obligation sits with the landlord. Windows and doors, it normally is that the window frame, the door frame, is classed as structure, and then the actual glass and door is classed as internal. If it's, the doors from the outside in. If they're doors between consulting rooms, then they're internal. And then electrics, again, servicing, if they need a service of some sort, tenants, repairs, is sometimes landlord, but they are a massive negotiation process, and not every lease is the same. There's not a standard for those three items. It's kind of a see who wants what. I normally tell all my clients who are looking to sell to make sure that their boiler, their electrics, and windows and doors are all up to a good enough standard, because investors coming in will ask to see those things. Move on. So the flip of a tenant's internal repair is a full repair and insuring lease. And that is where the tenants retain anything between 4 and 8% of the rent, which is not a lot of money. I'll let you all calculate that out for your personal practices, but it's not a ton of money. To be able to look after the externals, the structure, basically the whole property. The insuring obligations, the internals, everything is meant to be looked after between the 4 and 8%. The average, the norm is 5%. So 5%, I would work with a costing of 5% if you want to calculate it out. And that's approved by the NHS. So it's something to think of. Equally, a lot of investors in the last 12 months have been looking for more of these full repairing and insuring leases, because a lot of them are abroad now, and they don't want the hassle. Equally, people like Assura were looking for full repairing and insuring leases, and that's to do with the amount of property portfolio they've got. They didn't want to have to be looking after the repairs on each one. So, benefits of a lease to a landlord. It protects your investment value. It protects the security of the investment as well. So it protects who looks after what. It protects for how long you'll be receiving that rent for. And so that allows you to have a good market value if you were ever to sell. Your lease is transferable, so it can be sold as an investment. It can be passed on. And yeah, it clarifies who looks after what, who repairs what, who makes those improvements, and it avoids costly disputes, which and they do become quite costly. If you are arguing over the repair of the property and you don't have a lease in place, it's kind of anybody's guess who looks after what. And there's no legalities of it. So it's really important you get a lease put in place. NHS approval. So you don't need it. I would really advise you get it. Anybody can put a lease in place. That's the top and bottom of it. That's what I have to say to you is anybody can have a lease in place. You don't have to go through the NHS approvals process. Best practice, best advice is you do. Because what will happen at some point is you will have a shortfall in rent. And you will go to the ICB when the landlord hands you their rent memo to say that instead of £30,000 you owe £35,000. And then the ICB will go, we didn't approve this lease. We're not in negotiations with you. We won't approve £35,000. You'll continue to receive the £30,000. And because there's no rent review process in place that the ICB have agreed to, you'll be on the catch for that 35 grand, and that will only carry on going up. I've seen shortfalls of up to £25,000 a year, and it's had to come out of the practice's pocket because they didn't get their approvals through for the ICB. Now, I would always say that actually investors are looking, if you were wanting to sell or whatever, they want you to have the ICB's approval, because then they're not worried that at some point you're not going to turn around and be like, we're in liquidation, we can't afford it. They're gonna turn around and be like, well, the ICB have approved it. Let's talk to the ICB, let's get a rent through, and they can confirm that the rent will be paid for the existing time on the lease. So it's really important that you get NHS approval. The problem is, and the downside is it takes a long time. It's not a 2-week period, it's a 6 to 12 month period you're waiting on those approvals. So yeah, it's definitely important that you get it. Investor friendly lease terms. So we've talked about them: tenants internal repair, full repair and insurance. That's what those two acronyms mean. So they tend to be the market norms. But like I say, there are a couple of others, and it's definitely worth you planning what you want to do. Tenant's internal repair is the least amount of responsibility a tenant can take on. So you can't turn around and be like, we're not going to look after anything. You have to look after something. You're within a building. So tenant's internal repairing is the least amount of responsibility that you can take on. Lease length. I personally think 15 years is what gets you a good amount of value for the premises. It's in line with the lease terms that the ICB will approve, but it can depend on what condition your building's in. So the ICB might come back and say, your building's not up to par, we don't want to put a 15-year lease in place, we might put 10 in, or they might put a break clause in. So, but I would always start at 15, unless you're in a brand spanking new property. And when I say brand spanking new, I mean built since 2023. Then we'd be looking at 20-25 years potentially. Rent review provision should always be that the ICB are to confirm that they will pay the rent so that you don't have a shortfall. And that the negotiation process has started. An Armageddon clause. An Armageddon clause is different to a break clause. A Armageddon clause discusses if the NHS ever went into liquidation and we became privatised as a company, as a country, then your lease would be null and void because you're no longer receiving the rent under your GMS contracts. So that's what that clause is for. It is important. I would definitely have it, but it doesn't cover you if you handed back your contract or if you no longer wanted to be part of the practice. You're already tied in at that point. So you can't just hand back your contract because then you're personally liable for paying the rent. So it has to be under the Armageddon clause that happens. I never recommend a break clause. I think it affects the value too much. But some practices do need them. I think you have to take a reasonable view on it. But if you are a partnership or if you are doctors who own GP practice, you're currently in partnership and you're looking to sell, a break clause is going to reduce your value. So just bear that in mind. Questions before signing for a tenant. How long are you going to be in the building for? So this relates back to these open and honest conversations to have as a partnership. You know, how long are you all going to be in premises for? How long do you think you'll stay in that current building for? Is the building fit for purpose? Do you walk around it and go, there's a lot of repairs that need to be done here to make sure that we are fit for purpose, that we come out in any report as good? Is the building part of the NHS future estate strategy? You will know that if you sent your lease off to the NHS for approvals and they kicked it back and went, we're not approving that, you need a lease of 4 years or something, you would know that their plan is to potentially dispose of the property. Who's the landlord going to be? Is it going to be the ex-GPs or are they selling it on to a third party? And who will sign the lease as tenants? So like I said, it has to be the GMS contract or the APMS or whatever contract you have in place. Holder has to sign it and one other has to sign it. You always need a minimum of 2 signatories on a lease. So benefits for a tenant. It avoids costly disputes in terms of repair works and obligations. It gives you a specified term for how long you'll be in the property for. Your NHS rental reimbursement is agreed to by the ICB in their value for money process, so you know that your rent's going to be paid. You get the right to renew at the end of that 15-year period or the end of that lease, so you can renew on the same basis. It improved in regards to the NHS improvement grants. As long as you have longer than 10 years remaining on your lease, you can apply for an improvement grant to improve the property, to improve patient services. If you don't have a lease in place and the ICB know that you are not owner occupied and you have a landlord, they won't give you an improvement grant. Because technically what could happen, I'm not saying this is going to happen, but technically you could be served notice to leave the premises. Or you could be sued for doing something to the property that the landlord hasn't been agreed to. So the NHS won't give you an improvement grant unless a lease is formalised to formalise your occupation within that property. And it gives you a clarity of what your rights and obligations should be within the property. Are you looking after everything? Are you only looking after the internals? What's the plan? So sale and leaseback kind of falls quite nicely after leases, and then we've talked a little bit about sale off the back through this period, so I won't like linger on it, if you like. The sale of your building to an this is you get your lease approved, it's signed, you go to market and you sell to a third party. Now, what I mean by a third party is it could be a big conglomerate like Assura, PHP, or Medical. It could be a single-handed investor like Dr. Jones. We just don't know. Why to consider sale and leaseback? It does help with succession planning or succession issues, and it helps with recruitment. The reason why it helps with recruitment is you've removed that buying in part for potential partners and you offer them upfront what those lease terms are. There's no ambiguity, and that's what we're finding younger GPs like. There's no ambiguity as to what they have to look after if they become part of the partnership here. You don't have to buy in, and the property isn't under your control in terms of if the roof caved in, well, you ring your landlord and they fix it. Avoid redeveloping of a site at the end of a useful life and avoid losing investment value. What that means is, if, for example, you, as the owner, didn't have practice there anymore, the NHS dispersed your list, you would have to look at redeveloping the premises to either be offices, a house, depending on what kind of property you're in. And there is a huge cost involved with that. And it doesn't mean that you're going to get back in investment value. In fact, normally you'll have lost investment value because, as we discussed before, selling as an ongoing GP property is more valuable than selling as an empty site or selling as housing, unless you're in London. You avoid the risk of last man standing because you have to have 2 signatories as tenants on the lease, and it allows you to release your equity within the building. So the sale and leaseback steps are, if you were working with me, you'd have a meeting with me to discuss sale and leaseback and what lease terms you would be happy to sign up to. We would create a heads of terms document for you. That would go to a primary care solicitor of your choosing. You could have any solicitor, but my recommendation is to use a primary care solicitor. It reduces costs because they've already got the jargon and the lingo down for an NHS lease, and it reduces time for both sides in the end. They would draw up your lease. We'd then send that to the ICB for their approvals, or the NHS for their approvals. Once we've got that, we'd put you on the market for sale. And then you normally sit there for about 8 weeks. And then you go through your conveyancing with your solicitor. What I would say is the market has been quite rocky recently. 2023 was just basically 2023 was basically a complete standstill. Nothing sold, nobody sold anything. It was stagnant, and that was due to a lot of things. Bank rates, change of governments was coming in. Weren't sure what was going on with NHS England. Last year, we saw the bank rates come down slightly and people came back to the market. And then this year, what we're seeing is again, the NHS have released information about the changes that are potentially going to be happening. So it's slowed down the market a little bit, but we're hoping it's going to pick back up. So that's what we're seeing in terms of the market. But there's a number of investors out there, so you just don't know what they're doing with their timeframes as well. Sale and transfer of contract. This is slightly different. It's slightly quicker. It's probably only relevant for people who want to give up their contract. It's a huge thing to do. So what this means is you would transfer the contract across to the person who's purchasing the property. The only people who can take a contract are people who are already approved by the NHS to have NHS contracts. So what will happen is they'll come in, purchase the property, and basically be the GP partner who used to run it. But what that allows for is the current owners, if they're still in premises, to become salaried or to remain. Some people will allow you to remain on as partners. Most want you to become salaried. So it's another option, and this is a lot quicker. So it takes about 6 months for a sale and transfer of contract rather than 18 months for a sale and lease back. And it's mainly used for when you've got no partners in premises who will sign a lease. So this is the option that we give. I've just noticed the time, so it's a good chance to get some questions in, and then that'll be it from me today.
Okay, do have a few questions in the chat, so I'll just scroll back. We've got one concerning the valuation of the GP property, and it's basically, well, what makes up the value of the GP property? Is it just the rent?
No. So rent's a huge one. Space, current environment that you're in. So what's going on in the local area, your patient list size, the stability of the practice, and what does the repairs of the property look like? Does it look in good nick? The rent is a huge factor in it. I won't lie, is probably a good percentage of it. But you do have other areas. I once had somebody ask me, is all you do for evaluation take the rent and times it by 15? I was like, no, that's no, don't do that. Because you don't know where you're going to land. And equally, you know, there's no correct, it doesn't take into consideration a lot of variables. You know, somebody's not going to be paying to the market value will reduce if you have an unstable practice. It will reduce if your property is in disrepair. It will reduce if the environment that you're currently in, the landscape you're currently in is not right. And it'll reduce dependent on the bank rates and what's going on with NHS England and things like that. It'll also increase if you've got a great bank rate, or, you know, it'll increase if the property's in really good nick. It'll increase if you've got a really stable partnership. You know, all those sorts of things. And that's what we take into consideration. It's not just a rental income part.
Okay, continuing on, we've got a few questions regarding rent.
Okay.
So if there's a partner who's left the partnership, who's left and say, let's say retired, but he's not been bought out yet, would they still receive notional rent, or does it depend upon the partnership agreement?
If they've not been bought out of the premises, they should still be receiving rent. Yeah.
Okay. Another question, and I'll ask the question as I think the question is. This person is basically asking how the rent is allocated between partners. So it obviously very much depends upon the share of the partnership.
Yeah. So it depends on your shares within the practice. Certain GPs might have more shares, so they'll get a bigger portion of the rent. Also says, what's your partnership agreement say a little bit? So yeah, it depends on the amount of shares they own within the premises, dependent on what the rent is, the proportionment of rent.
We've got a few more questions. If we just put it onto the next slide, because I'm conscious of time, just so that if people do need to leave, they can grab our contact details. We've also got, if you do have further questions, I'll just pop into the chat. You can book in a time that suits you to give us a quick call, and we're happy to do like one-on-one chats. If you do have to get off, I've just put that into the chat there. Yeah, we do have quite a few more questions, so we'll go through those and answer them. We're happy to stay on and get through all of these. If anyone does need to leave, obviously I'll send the recording to everyone and you can pass that amongst your colleagues, so that's fine. Right, so I'll get back into the questions. So this is from Anthony. If you are retiring in the next 12 to 24 months, is it not advisable to sign a new lease?
If you're retiring in the next 12 to 24 months, if you've already I'm assuming, I shouldn't make assumptions, but it sounds like you've got a lease already. So it's coming towards the end of that. I would say if you're looking to retire in 12 to 24 months, I would have somebody else sign that lease if you possibly can. Sometimes it's not possible, but if you've got the option of other partners to sign it, yeah, I would have other partners sign it.
Okay, that's that one. We've got another one here from Benita, the Red House Surgery. For stamp duty land tax, is there any relief for GP premises?
Yes. Oh, well, not for GP premises. It's more of an accountant's question. You do get certain relief on certain aspects. I think if you went to your accountant, so here's the thing, if you go to an accountant and you give them the lease and you give them the potential sale price, they can work out stamp duty, land tax on what is going to be due, and they'll also give you what you can do to get exempt. Not everybody can fall into that exempt category, unfortunately.
We've got a couple more. Okay, this one. I'm a single-handed GP holding a GMSE contract in Dudley. The premises needs extension and modernisation. I've developed plans for an extension. Is an NHS improvement grant available for this? If so, how do I apply? Do we help?
Yes, there should be. You can look at ETTF funding. You can look at Section 106. It just very much depends on what you want to do, but you need to put a business case study towards the NHS or the health board and ask them for the funding. You'll also need to provide costings for it as well. But yes, you can get grants for improvement works.
Okay, next question is from Shirin. She's just checking if she's understanding correctly. If there are not two partners to sign a lease, then this would be a sale and transfer of contract. How does that affect the partners, given they would no longer hold the contract?
So it would. You don't have to have two partners sign the contract, sign the lease. It has to be the GMS contract holder and one other. So that could be a nurse, it could be a practice manager, it could be one other person. Basically, it doesn't have to be a GP partner. If you've not got two people to sign the lease, then yes, you would go into a sale and transfer of contract, or that would be how I would dispose of the property side of it anyway. And you would negotiate to become salaried partners. It's salaried, not partners, salaried.
We've got a couple more. There's lots coming in now. So this is from David. We're in London. Our accountants have valued our premises for our accounts at 60,000 more than our recent Red Book valuation. Is this common for there to be the discrepancy in an accountant's valuation and a surveyor's?
I have never heard of an accountant being able to do a valuation. So unless they're doing something in regards to the business valuation rather than a property valuation, then I don't know. It's bizarre. I've never heard of an accountant doing a valuation unless it's to do with the business. In regards to the property, yeah, it has to be. It would have to be a RICS valuation you would want.
Okay, hopefully that's helped. So this is another question from Anthony. I take it sale and transfer will be valued less than sale and leaseback?
No. So they tend to come out at the same price because we're still using that hypothetical lease term. Because what happens is the person who you sell to that takes over the contract, they're going to receive the notional rent for however long, and then notional rent is based on hypothetical lease terms of 15 years, tenants internal repairing lease, 3-yearly rent reviews. So they come out at pretty much a very similar markup. It doesn't get you don't get less for doing a sale and transfer of contract.
Oh, okay, right. This is another one from David. If any of our answers have not quite answered, just post something back in the chat. I'm happy to clarify more and kind of continue chatting. I know it's 2 o'clock, but as we said, we've got time to kind of stay on if anyone's got more questions. So this is a question from David. The scenario with David's practice is two property owning partners are leaving and 2 new partners are coming in, but they can't agree a price to buy the practice. So if the people that are leaving are going to sell to a company rather than the incoming partners, he's asking who would need to agree the lease with the incoming company. Essentially, the people that own the property are going to need to.
Yeah. So basically, I'm guessing all the owners are selling to this company potentially. Then you as tenants would need to negotiate the lease with the new owner. Whoever the owners are is who you negotiate the lease with. So yeah, you don't have to create the lease, but I would say, especially now that a third party company is involved, you definitely want a lease put in place just to protect you. So if they don't initiate it, you need to initiate it.
Okay, well, we've got no more questions in the chat. I thought I did see someone put their hand up then, but now it's gone.
Yeah.
Is there anyone else that had another question? Out they've gone now. I don't know who that was that had their hand up.
Is there anything anymore? No? No.
Don't believe there are any more questions. Right, so yeah, our contact details are on the screen. In the chat, there's a link to book a call and time that suits you if you want a one-on-one chat and we've got more information you need and guidance. Yeah, I think that's it for now. So thank you very much. Thank you everyone for coming. And I hope that proved useful. As I say, just drop us a call or send us an email if you've got any more questions and we'd be happy to help. Okay, thank you. Bye.